Okay, welcome to this weekly outlook. I go by the name of Kelvin and I'm a currency trader and also a trading coach at RatePulse Market. In this video, I'll be covering the weekly outlook on different currencies, individual currencies in terms of fundamentals, and also I'll be covering the trades that we happened to take last week, and also I'll be looking forward to reveal some few opportunities that I'm looking currently. This is the week, the beginning of this week. It is 19th January of 2026, and of course here is the weekly outlook. Now the first thing that we shall be something that we start always with is the risk off and the risk on. Currently on my chart you can see we have the VIX index, that whereby we are looking actually on to see whether we are in risk off or risk on. And on the chart you can see we have a blue line which is running a horizontal at the value of 20. So once you see that the current reading is below 20, we are in the risk on. We are actually currently on in risk on. Let me just write it. That is now risk on, and above the 20 zone, this is whereby we have risk off. Currently you can see actually we are in a very good risk on, whereby the value currently is running at is reading at 15. Yeah, 15. Let me just point out, whereby we are reading currently at 15.86. We are currently in the risk on, regardless of a lot of geopolitics or geopolitical tension which are actually taking place, where we have a lot of things which are actually happening. And one of them is actually the incident related to Venezuela, the president being kidnapped. We have another issue whereby the Greenland, the US is looking for, Trump is actually looking forward to have the Greenland. And actually we have a lot of risk geopolitical tension, whereby we have US and Iran probably may be involved in whereby one country may be attacking, whereby the now US will be attacking Iran. Due to whereby there are a lot of protesters killed in Iran, and also possibly we might see that kind of a geopolitical escalation. So we should be looking forward into that. Regardless of a lot of things related to geopolitical tension happening, the market is not currently pricing it as geopolitical tension. So you should pay much attention to that whenever that kind of a risk off and a risk on happens to turn. If you want to confirm, we can still look at S&P 500. You can see that the actually is pushing to the upside. Therefore, the VIX index is currently. Let me just get to remove every drawing on this chart, so that at least we can have everything in good condition, and then I will be having it on the daily. Once you check on this kind of graph, you can see that S&P 500 has been pushing to the upside, actually looking very quite okay. And therefore the VIX index is currently the risk on. So therefore it's very hard, like we should be paying much attention to the geopolitical tension just in case of anything that happens. Now once we've done that, now let's get to whereby we now be covering the fundamental analysis based on each and every currency. Now we are going to start with the dollar. We are starting with the dollar, and actually if you remember if you haven't watched the previous video on the weekly focus, you can try to check on the channel, and also I'll be trying my level best to have the link above here, so you can go and check how I was interpreting this. Now let's cover the dollar. Of course, you know, when you are covering the fundamental analysis, it's quite very simple. We have a lot of things which are actually currently happening in the US, and then we need to pay much attention to them one by one. Now one of them is when we're looking at let me just go to this kind of lovely trading economic website, whereby we shall be covering each currency individually and see the way forward. So when I happen to click on the United States, we can see all the indicators here. We have overview, GDP, labor, price, money, trade, government, business, consumer, housing, energy, health, and a lot of things. Now the first thing that we want to cover is actually how the economy is performing. We need to look forward. We need to know and understand the business cycle under which US is currently in. Now the first one we want to cover is the GDP, And we can see actually from the bar graph, it's quite very simple and very straightforward, that you can see actually the GDP is actually pushing to the upside, and therefore it's kind of expanding. You can try your level best. You can also read here whereby it's saying the GDP in the US advanced and annualized 4.3% in quarter 3 2025, the most in 2 years compared to 3.8% in quarter 2 and forecast of 3.3%, the delayed estimate showed. Now, even without reading much, you can see from the bar graph, actually in the United States, the economies are doing very well. Now, that isn't something you need to pay much attention into. Then the second thing that you need to cover is actually the inflation, because you have to understand the relationship between GDP, inflation. You have to understand now the relationship between GDP and inflation. Now, when I happen to click on the inflation, let's do check on what the inflation is actually doing. Now, when you check on the inflation, we have to understand that when you look at the bar graph, we can tell actually tell that we had a drop whereby the inflation was dropping from 3% to 2.7%, which has already been stagnating there for two data release, whereby it's actually at 2.7. Now, there's something you need to understand. Even though the inflation is actually dropping, we still have the inflation being at 2.7, which is actually way higher compared to the to the Fed inflation target. If you were to come and do a Google search, quite very simple, that is now Fed inflation target. This is something you should be knowing. It is quite very simple. You'll come to realize that the Federal Reserve, which is the Fed target, and inflation of 2% over the long run. And therefore, the inflation being at 2% is actually not healthy for the economy. Now, the third thing that you need to understand is actually simple. And that is now something very simple. We need to cover what we call unemployment rate. When you look at the unemployment rate, we are currently at 4.4 after last week data release related to job, the labor sector. And then you can see that the unemployment rate is actually way higher. But from the previous week, we had an improvement on the labor sector, whereby the unemployment was actually dropping. And therefore, now that is kind of signaling something quite impressive when it comes to the US. Now, the reason why I want to cover this is because I want to come to conclusion on the buyers on the US. Now, something else we need to cover after all we have to do is cover what we call the interest rates. Currently, we are at the rate of the inflation, or the interest rates is currently at 3. That is actually 3.75 after a rate, or after a cut of 25 basis points. Now, you need to understand, when you're trying to do the analysis based on the fundamental analysis, you're going to understand first of all the context. When you listen to Joel Powell, most of the time when the data is being released, especially during the press conference, he always say due to dual mandate. Therefore, the two responsibility for Joel Powell is actually manage, or the Fed is actually make sure that the inflation is in order, and also the labor market. Currently, from the last interest rates decision data release, the Fed signaled 2 cuts for the interest rates in 2026. 2 cuts. Unfortunately, the reason why they were to cut the interest, it was to control the unemployment. And therefore, the US being kind of experiencing a better or a decline in unemployment rate, there's a high possibility that we might not see the Fed cutting the interest rates. And therefore, this is actually what I will be looking for the dollar. If you happen to check, it is quite very simple. You just come and you can mark possible resistance and support, which you have there, over there. Yeah, very cool, very simple. Now, from this currently, remember we only trade supply and demand. I will be looking for the dollar actually to drop into this kind of a demands over, like over here, over there. So then we can have a push to the downside, like to the upside. So this is what I will be looking for. If we happen to push below there, then we can have a possibility of running to that kind of a push, like a move to the upside. And also we need to consider another supply zone over here. This zone, we might see the price actually consolidating into that kind of a, this is a supply. Let me just have it. So we can have that kind of a price being consolidating in the same zone over there, whereby we have a supply zone here and our supplies here. But you need to pay much attention to the data which will be coming out for this week. If you happen to go to my Forex Factory, of course, let's cover and get to understand what kind of a data we shall be releasing, we shall be receiving this week. Actually, just go for this week, then set, apply, then come over here. Then we can have the dollar itself, US dollar, and then boom, we are done. Now, on Monday, if we check very closely, we can see on Monday we shall not be having any. It's only that we shall be having bank holiday. Then on Tuesday, we shall not be having any data. We shall be having a DP weekly and employment change. We shall be paying much attention to this because this is actually related to unemployment, although it doesn't have much high impact, but we shall be focusing on that. Then we shall be focusing on, we have President Trump. We shall be having that kind of a speech on Wednesday. There is a high possibility we might see tariffs back, so we need to pay much attention to that. Never allow yourself to miss. Then we shall be having the GDP, that is quarter to quarter, and we shall be paying much attention whether we shall be having any what kind of a business cycle, whether we shall be falling to contraction or we are going to have recession. But it's very hard for us to have the recession, although most of the investors are saying that we might have a recession over this year. But it's not yet a policy, or maybe it's not yet validated. So something else we shall be focusing on, shall be having the PMIs and all that. So actually on the dollar, it's very simple. What I will be looking for is that kind of a drop to the downside, then push to the upside. Because actually the Fed is supposed to be cutting the interest to control the labor market, but the labor market is actually showing some positivity, whereby the unemployment rate is actually falling, and it's quite good for the dollar. So I'll be looking forward to have that kind of a drop, then push to the upside. So that is now the dollar. But if anything that comes out, we have a lot of things which are actually going through in terms of geopolitical in the US, whereby we have a possibility of receiving the new Fed chair, which currently we might be seeing a very dovish Fed chair. So we should be paying much attention to that. Anything can change. Now, something else we need to cover, it's once we are done with the dollar, let's go and cover the euro. On the euro, everything looks quite very good, even though they are not aggressive in the hiking or cutting the interest rates. So they're let's just try to cover. Let's first of all look at the GDP. Let's go and cover everything. So it is quite simple. Come to the trading economics. The first thing that you want to do is go to the eurozone or the euro area. Once you understand, once you are there, just go straight forward to whereby we have the GDP, gross domestic, growth domestic. Here we have growth domestic rate. When you look at the GDP, is actually showing some kind of a expansion, whereby the last data release we showed kind of a positive record, whereby we had an improvement on the way from 0.1% to 0.3%, which is recording an expansion. So once you understand that, the second thing that you need to understand is that anything related to inflation. Scroll down, so then get to the inflation rate. Currently, we had a drop on the inflation, but get to understand, even though the inflation is dropping, it's actually at the 2%, which is at 2%. Remember, the central bank, the European Central Bank, inflation target is actually 2%. Therefore, GDP is actually in a very good condition. Inflation is also in very good condition, so there is no need of them hiking the interest. Neither are they looking forward to be cutting the interest rates. Then the third thing that we need to look at is unemployment. If you check at the unemployment is actually very well. If you were to read here, this one is something simple we can read actually. Unemployment rate in the euro area decreased to 6.3% in November from 6.4% in October 2025. Unemployment rate in euro averaged 9.17% from 1995 until 2025, reaching an all-time highs of 12.20% in January of 2013 and a record low of 6.2% in October 2024. Actually, it is telling you that unemployment rate in the euro is actually very low. So it's actually in very good condition in terms of what? In terms of GDP is in very good condition. Inflation is also within the target, and also unemployment rate is actually looking healthy. Now, something else we need to cover is actually the bank stance. Now, on the euro area, neither are they looking forward to be cutting the interest rates nor be hiking the interest. So the overall general being in the very good condition, whereby the president of European Central Bank, Lagarde, said on the last meeting press conference that the environment looks the euro area looked was in very good condition. Therefore, the euro is kind of bullish but not aggressive. Bullish but not aggressive. So I was looking for this kind of a demand, and it seems like we have already violated that. So I'll be looking forward for the price to drop all the way back here, somewhere into this kind of a demands over here. Remember, we trade only demand and supply, which is quite impressive. So there's no rule broken. So we are waiting for the price to see if the price will be looking forward to to get into that position, and then we can get to buy from there. Now, the dollar being kind of turning into bullish, we had this kind of an accumulation zone. Remember, accumulation zone is quite very impressive. Accumulation zone. So we might be looking forward to this kind of a demand zone over here. Let me just have it. So you might see that price pushed below up to that position before moving to the upside. Hey, what the hell did I say? Move. Anyway, before that move to the upside. Actually, that is actually what we are looking for. Now, remember, we need to look at the fundamental divergence on each and every currency before execution. So, having covered that, the next thing that you need to cover, on the euro, I'm bullish but not aggressive bullish. So, we shall be looking for the price to get into that demand zone. So, the second thing is we can draw support resistance over here, like over here, then another zone over here. So we should be paying much attention to that. We might see kind of a drop up to this position before moving to the upside. Now, something else we need to cover, that is now euro. We are bullish but not aggressive bullish. So we should be looking forward to that. In terms of geopolitical attention, we don't have any geopolitical tension, which might come, which is happening currently in the euro. Something you need to understand, if we are going to have the tariffs back, if we are going to have the Trump tariff game back, we might see some positivity in the euro being in very good condition, and we might see that push to the upside. So let's cover something else that is now on the euro. Something else you need to cover is the Japanese yen. On this pair, I don't know what is actually happening. We have a lot of things which are actually happening on the on the Japan economy. So let's cover one by one from the growth of the GDP. Now, the first thing is you can go to trading economics, get into Japan. Then the first thing you need to understand is actually look at what we call the GDP. Actually, GDP. On the GDP, then click on there. We can tell actually the GDP in Japan is actually dropping, showing that the economy is not doing very well, and that is now something negative for the Japan. Now, something else we need to understand is the inflation. Of course, very simple. Inflation rate, we shall be having, when you look at the inflation rate, let's check. On the inflation rate, we can tell that, currently we are dropping, whereby we moved all the way from 3% to 2.9%, which is kind of good. But inflation being at 2% is not healthy for the economy, since the Bank of Japan inflation target is always at 2%. And therefore, the inflation being at 2.9% is not actually healthy for that currency. So something else you need to understand is that whenever we see, there's something we need to cover on Japan. It's called carry trades. Current rates is whenever we shall be having anything that you find that inflation is way higher. If you find that inflation is way higher than the interest rates, it's a wrap, bro. It's a wrap for that currency. You can see now currently on the interest rates it's at 0.75, which is way low compared to 2.9, which is the inflation. So most of the investors will be looking forward to be borrowing money from Japan and investing on high yields currencies like the US, like the Euro, like the UK. Therefore, the Bank of Japan needs to do something else. Like they need to do something when it comes to the Japanese yen. It's kind of very weak, and we're looking forward to have that weakness continue. Now, there's something else you need to cover. In terms of geopolitical tension, we have a lot of geopolitical tension which are currently happening in the global markets, and in Japan we also have geopolitical tension whereby the currently or the newly first female prime minister to be elected, Takaichi, whereby they are having that kind of electoral, anything, most of things related to to elections. If you need to understand all this geopolitical tension, you're gonna go and listen to Bloomberg. I have not subscribed to their weekly newsletter, but at least following up with the live sessions, I get to hear a lot of these things which are actually happening. Currently, Japan is facing a lot of geopolitical tension in terms of elections, and we might see that continuation. Then there's something else we need to understand, that in Japan, the government is actually signaling that there will be an intervention, since the forex market are not actually favoring the yen, whereby we have the yen being very weak currently. So there is a high probability we might see the government intervention. Then if we are going to have the intervention, we need to pay much attention to that, because that might even possibly change how the price will be moving on the Japanese moves. So currently what I will be looking is very good bearish on this pair, and currently I have some few trades which I'm currently holding related to yen. I'll be sharing with the screen. Then this is what I'll be looking for. Remember something else, we can come try, I'm bearish on this, so we can have that kind of pullbacks or maybe resistance and support, whereby we can have let me see, it's not currently that straightforward. Let me just go to something else. No, I'll just start from the daily. So we might see that price actually pushing below over here. We might see that push below up to that position, and therefore we might also be looking forward to be having that kind of a what. Let me see, if we were to trade, I'll be waiting for the price to come back over here for that kind of a pullback. Let me just go and mark it, supply zone. So we might have the price push back into that zone. Remember, this week we shall be having, we need to pay much attention, because on Friday, let me just have it. So the Bank of Japan is actually signaling that they will be hiking the interest rates. They actually hiking the interest rates for them to control the inflation, which is quite well. So whichever data, I think we shall be having the inflation before the interest rates in the same day. If I happen to go on the Forex Factory, then I'll go switch from the dollar to JPY, which is quite okay. So this is straightforward. So on Friday, we shall be having a lot of things which will be happening. On Monday, we don't have anything related to that to pay much attention to. Then on Wednesday, there's nothing much to pay much attention to. Then on Thursday, nothing. Then on Friday, here are the things. This is the most important thing. On Friday, we shall be having the national core CPI, which is year to year. We need to pay much attention to that, because the current, they are saying that actually the forecast is supposed to be 2.4%, which is also saying that they should be, the inflation is supposed to be dropping. So we need to pay much attention to that. Then on the same day, we shall be having the Bank of Japan policy rate. This is whereby they will be hiking the interest, whereby they are actually saying that they are looking forward to hiking the interest rates, whereby the forecast currently is at 0.7%. They are which is supposed to be held. If we see that kind of a hike, It's might be possibly for very good for the Japanese yen, and if the government happens, even if, and this is the thing to look, if they happen to hike the interest rates and signal more hikes, and the data which will be coming out actually supports the hiking, then the yen might be probably be experiencing some kind of a strength for what, like for the rest of the other days. Now, so that is what I will be looking at. Then we need to pay much attention to that. Something else you need to look at is actually the United. That is now the UK. If you haven't watched the video or the previous weekly forecast, you can go and watch, whereby I was saying that I'm looking forward to have UK dropping all the way from there up to currently from here, and maybe see it drop up to this position. Now, we need to cover some few things. We have a lot of things which will be coming out for the United Kingdom this week, and we may need to pay much attention to that. So the first thing we need to go is to go to the trading economics. We need to understand how the economy is doing, how is inflation performing, and how the bank is looking, the Bank of England looking forward in terms of is it to hike the interest rates or is it to cut the interest rates. Now, the first thing we are going to cover is actually the GDP. If you look at the GDP, the economy is actually contracting. If you look at the data, we had the drop all the way from 0.2% to 0.1%, and actually there is a speculation that we might have a recession in the UK, so we need to pay much attention. That is just a speculation, so we need to pay much attention to that. If it is announced that we have a the UK is into the recession, we know how to actually react. So the UK gonna be very, 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 very dovish. So the GDP is dropping. The next thing you need to cover is inflation. Inflation currently is at 3.2%, which is way, 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 way high compared to the Bank of England inflation target, which is actually 2%. And therefore, they need to pay much attention to that. So the inflation is actually way high. That is another thing which is more dangerous for the UK. Something else is now the inflation. We need to pay much attention to the unemployment rate. Actually, unemployment rate is also at the highest. You see, unemployment is actually highest. So we still have inflation being at a very high, at 3.2%. Then unemployment being at 5.1%, which is also very high. So the Bank of England has a lot of things to have a lot of objectives. Are they first of all going to deal with the inflation, or are they first of all going to deal with the unemployment? So we need to get to understand the context. Is the Bank of England looking forward to control the inflation first, or are they looking forward to control the inflation first? Currently, they are saying that they will be looking forward to be cutting the interest rates. So whenever they will be looking forward to be cutting the interest rates, they are focusing on the unemployment rate. Unemployment rate. So first of all, they are dealing with the labor. So we need to pay much attention. And why are they looking forward to deal with the unemployment rate? It's because when you look at the inflation rate, we can see we had an improvement, whereby we had a drop all the way from 3.6% to 3.2%. So inflation is currently showing some kind of an improvement, whereby it's dropping towards the target, but unemployment rate is actually pushing to the upside. And therefore, if the unemployment rate happens to keep on worsening, the Bank of England don't have any kind of a decision. They don't have any option rather than cutting the interest rates. And therefore, it's quite gonna be dovish for the UK. So for the UK, I'm just looking for the dovish. So we might see that kind of projection to the downside until maybe we get into this kind of an accumulation zone over here before getting the next Bank of England decision making. And then this week, it is quite very impressive to look at what we shall be having a lot of this week, or maybe what we shall be paying much attention to. Now, whenever we can go on Monday. On Monday, we don't have much thing anything to pay much attention to. On Tuesday, we shall be having let me see. Yes, we shall be having Bank of England Governor Billy speaks. So we need to pay much attention to that, because he might come and probably signal something which will be much helpful for us as traders. Now, on Wednesday, we shall be having CPI year to year. We need to pay much attention to that, because actually we have seen that inflation is actually very high. So if the inflation happens, you can see now currently they are targeting, like they are saying they will be looking forward to cut the interest rates, and if the inflation shows kind of an improvement by declining, they don't have another option other than cutting the interest rates. And then we need to pay much attention to that. Something else we need to pay much attention is unemployment data, whereby this week we shall not be having any kind of unemployment data, but we need to pay much attention to the inflation, which I don't think we're gonna be having much intention, like impact on that currency. Therefore, we might see that UK, that is now the pound, dropping all the way down here. Something else we need to cover is actually now on the Swiss franc. Swiss franc is quite very impressive. Currently with a lot of geopolitical tension which is actually happening, and us being in this kind of an accumulation, I only trade 5 pairs. Yeah, we might see that kind of a drop up to that kind of a knee before that move to the upside. Let me just have that kind of a demand zone. We have a lot of geopolitical tension which is actually happening in the global market, and we might see the CHF being having those push to the upside being a safe haven. Something else you need to pay much attention to is what? Let's see. Gold. Let's cover gold. Gold is quite simple. Gold, we are actually possibly gonna see some push to the upside. So I'll be looking much to buy all the way from here, all the way from that kind of a demand zone over here, before like the drop all the way from there. Remember, we only trade demand and supply. We don't trade resistance and support. We might see that push to the upside. Well, that is now on gold. Something else we need to cover is let's go and cover some currencies and see whereby we might see some opportunities. Currently, I'm holding a trade on this. First of all, let's go on the euro. Euro, I have no trade currently, but I'm expecting that kind of a push to the upside before drop. We might see that push to the upside, then continuation to this kind of a demand zone over here. That is actually what I'm looking for the euro USD. Something else you need to cover is euro GBP. I'm still holding these buys. We've been accumulating for this in this area after hitting a small stop loss of around 10 pips last week. We've been accumulating in this area for last week, and probably we might see that price pushing to the upside. So we need to pay much attention to whatever will be happening here. Currently, let's see on the forward time frame how the price is actually happening. We are in a small. This is the stop loss I was talking about. I haven't yet draw. Let me just delete it, and then we have that kind of a price into that currently. Something else we need to check is I'm looking forward to be buying the dollar US JPY. If you happen to go on the forward time frame, but I will be updating each and every trade that I happen to take. We can see that we have this kind of a resistance turned into support. Let me just mark it red. It is quite impressive. Then we have this one, red. Yeah. So we might also possibly have the price drop all the way from that into that kind of a supply demand zone over here before push to the upside. So actually that is what I'm looking at. Remember, here we have the accumulation phase, as we will do always. So it is good for you to understand the accumulation. So whenever we shall be having that, down price move to the downside up to this kind of a demand zone, then we shall be looking for the way to buy to the upside. Something else we are hoping for is the GBP USD. We might see that continuation of a drop. We might see that drop continuation. We might also see we have accumulation over here before we have that kind of chaotic things in the Fed related with the Powell, Trump stuffs and all that, tariffs coming back. We might also see price pushing below into this kind of a demand zone here. So I'm looking forward to have the United Kingdom or the GBP drop all the way from here. maybe we can have a pullback a little bit to that zone, then push to the downside. So something else we need to go and look for is accumulation. Remember, we only trade supply and demand. We have this kind of a drop, or maybe we have this kind of a break of structure to the downside with very good momentum. So we might we have that kind of a break of structure, so we can have that price come back over here, the zone that over there, like that supply zone there, before moving to the downside. So that is actually what I'm looking for. We can have this on a supply zone. It is quite very simple. Yeah. So having covered that, I would say it's a good stuff. We can really wait for the price, how we are going to. The prices you can see now today being on Monday, prices are actually opened with a very good gap. Yeah, to the downside is now pulling to the upside, and we might also have that price move to that supply zone before dropping to the downside. Currently, I don't have any other pair that I'm looking. Something else we are looking for is the GBP JPY. This is a currency where this is a pair which we took a buy from this all the way from here, and now you can see that actually price is back into the same zone, whereby I'm not looking forward to be executing any kind of a trade. I just want to look at how the price will be behaving from that zone before making a decision whether to buy or sell, because GBP is weak, JPY is also weak, so there's a high probability like to be wrong on that area. Right, something else on the euro, no, JPY, CHF JPY, I don't have any setup. So having said that, I think we can call it a recap. We can call it a day. So let's wait and see how this week goes. So, and remember, go and watch the trading journals, all the trades that I've been executing. Yeah, to make it to make it memorable 2026. Yeah, all the trades be taken. I'll be recording them. I have already started. So far, we think we've managed to take 4 trades, and yeah, it's just quite impressive. So again, I go by the name Waweru Kelvin. I'm a currency trader and also a trading coach at RatePulse Market. See you guys to the next video, and I want to wish you a very grateful week of profitability. See you next time. Bye bye.